Good morning, everyone. Once again, this is Black Forest Company with another market analysis video. This morning, we're going to be looking at the Euro USD. But before we get started to break down this currency pair, we have to say that this video is for educational purposes only. This is not financial advice, okay? But we all know why you guys are here, which is to find good, credible Forex content that can help improve your ability as a trader and that can help put a little bit extra money in your pocket, okay? So with that being said, let's go ahead and break down this currency pair and get straight to it. All right, so let us talk about the euro because if you watch the previous videos, you'd have a good idea what's going on with the USD. But for sake of thoroughness, we will still discuss what is happening with the USD. Okay, now what is going on with the euro, right? From a fundamental standpoint, is that we did have some good news come out night about the euro concerning its PMI. So it does have some good news in its favor, but this is the thing about it. It still has a lot of heavy inflation hanging over all the countries that is making up the EU. And it does not, like Japan, the EU have put a plan in place to combat its inflation. They may be leaving it to every individual country that makes up the EU to take care of the inflation on their own. Okay, so that's going to be a little difficult to measure because you will like to see a collective group effort to do it instead of everybody being left to their own devices. Because some countries in the EU may try to tackle inflation very aggressively, and some countries in the EU may just, be very nonchalant about it. There's one thing about European culture, they're kind of very laid back when it's come to like business and stuff. You got 4-day work weeks in some of those countries, and some of those countries they actually take more vacations than actually work. So, and it's just a part of their culture. Everybody have their own culture, but it just is what it is. Okay. So we're going to have to see how these things play out. And then we also have a lot of reverse negative ripple effect from the Russian-Ukrainian sanctions. They tried to sanction Russia for invading Ukraine, but a lot of basically what they did was shoot their own self in the foot because one of the major EU's trading partners is Russia, and they get a lot of raw goods such as oil, rubber, and timber from Russia. Being that they can't get these raw goods, a lot of their countries' companies are suffering that manufactures goods because now they have to look for other alternate means to be able to get these raw goods from other places, which will actually cost them a lot more money. Okay. So with that, that is also another effect that is negatively affecting the euro. And then on top of that, there's a lot of fear, uncertainty, and doubt surrounding the entire European continent's economy as a whole due to the destabilization of the Russian-Ukrainian war being fought on the continent. But we are having some peace talks, so we're going to have to see how these peace talks start to play out when it comes to when it comes to this when it comes to actually dealing with the euro gaining any type of strength. So if these peace talks start to go well, then when we start to see an increase in strength between the major three European currencies, which is the euro, the CHF, and the British pound. Okay, so what's going on with the USD? We're looking to see how the interest rate is going to deal with inflation, how these economic policies and measures placed by the Fed is going to deal with inflation. We are in this situation where it can go two ways. If the increase in interest rate and the economic policies and measures put in place start to combat inflation effectively and expeditiously, then we will be in a situation where the USD will gain strength and gain it very rapidly. Okay, but if we are in a situation in which that the increase in interest rate and economic policies and procedures and that they're putting in place to combat inflation is not tackling inflation very well or not doing it in a very good time frame, then we'll be in a situation where the US dollar will become very weak and start to become much weaker than it is, and we'll start looking at a American recession. Okay, so let's talk about what's technically going on the chart now that we got all that out the way. So since the beginning of the Russian invasion, we've been going down, going down, and going down, going down. And then we started to have some retracement up, but basically we're not going up as with a lot of momentum, as you can see, what we started going down. And throughout the trading week, we've gone down, started to go up a little bit, go down, and now we're in a situation where we're here. So it's a very good, there's a possibility we could pick up to this area here or here or here before we continue to go down. We could range out at this point here and go down, or we could go down to this area from this point here and start to go down to this area here or here. The more likely scenario is we could range out in this area here before we go down, or we could drop down to this area here before we start to see a range of pathetic push up and to go down, or we may drop down to this area here before we see price starts to pick back up again. So those are the few scenarios those are the scenarios that could be happening surrounding the Euro USD. What's going to dictate that is like what dictates all the currencies, what's happening with each respective economy in relation to its issues that it's trying to handle, tackle, and deal with. Okay. I hope that information was helpful for you guys. Happy trading.